This video is an uncovered Japan company research report on Alconix, ticker 3036. Alconix is a Japanese non-ferrous metals trader that has spent a decade adding higher-value manufacturing businesses. The question is whether that shift can lift returns above the commodity cycle. As of the report's June 2026 source data, Alconix traded on 10.7 times forward earnings and 0.95 times book value, with a 3.5% dividend yield. That is inexpensive against the broad wholesale sector, but not a deep bargain against pure trading house peers. The key gap is ROE, 7.1% versus management's 12% ambition. A classic metals trader buys, finances, and distributes aluminum, copper, nickel, and rare metals. Alconix still does that, but it also processes materials and supplies qualified parts into semiconductor, EV, aerospace, and defense supply chains. This vertical span is what differentiates the business. Commodity trading remains thin margin. Processing, materials know-how, and customer qualification are where the economics improve. The segment picture is the core of the thesis. Aluminum and copper is around 41% of sales, yet it made a small recurring loss in fiscal 2026. By contrast, metal processing is only around 19% of sales, but generated roughly 3.6 billion yen of recurring profit. Electronic materials added about 2.4 billion yen. As mix shifts toward those activities, the group becomes less dependent on commodity spreads. Revenue rose from 156.3 billion yen in fiscal 2022 to 219.7 billion yen in fiscal 2026. Operating profit recovered to 9.7 billion yen, up 40.8% year-on-year, while the operating margin reached 4.4%. Net income is noisier. Fiscal 2024 included a special loss. For this company, the more useful indicators are operating profit and the mix of the recovery, rather than any single year's net income. Alconix carries the working capital of a trading house. Receivables, inventory, and financing needs are substantial. The equity ratio has improved to 35.6%, while interest-bearing debt was about 60.3 billion yen. That balance sheet shape is manageable, but it helps explain why capital efficiency matters so much. The company has made progress, yet ROE remains well below the stated 12% target. Cash flow is inherently lumpy. When metal prices and trading volumes move, working capital can absorb or release large amounts of cash. Over the reported period, operating cash flow ranged from negative 3.3 billion yen to positive 15.2 billion yen. The discipline is to judge cash generation across a cycle, not from 1 year. Rising manufacturing capex is strategically sensible, but it also reduces the free cash flow cushion. Capital returns are a genuine strength. Dividends rose from 52 yen in fiscal 2022 to 84 yen in fiscal 2026, and the company held the dividend even through the fiscal 2024 special loss year. The long-term plan adds a dividend on equity floor, and buybacks supplement the payout. The policy does not remove cyclicality, but it makes the shareholder return framework more durable than a simple earnings-linked dividend. Management's long-term plan 2030 ties the pieces together. Grow the manufacturing mix, improve the return on low-earning trading assets, and pursue 15 billion yen of recurring profit with a 12% ROE target. The underlying end markets have structural support from semiconductors, electrification, and aerospace or defense. But the targets remain an ambition, not a result. Commodity prices, the yen, and execution on capital efficiency will decide whether the plan lands. Valuation captures both the opportunity and the limitation. At 10.7 times forward earnings and 0.95 times book, Alconix looks cheap against the broader wholesale sector. But pure trading peers trade lower still. The market is already assigning some value to the manufacturing content, just not enough to close the sector gap. A re-rating depends on proof that margins and returns can become structurally better than those of a conventional trader. The report uses scenarios rather than a single target price. The base case reaches 2,910 yen by fiscal 2029, roughly 15% above the report date price, assuming the mix shift continues and commodities stay stable. The bull case reaches 4,371 yen, the bear case 1,378 yen. These are illustrative assumptions, not forecasts or recommendations. The width of the range reflects real exposure to commodities, semiconductor demand, and valuation sentiment. Alconix is a metals trader in the middle of becoming a higher-value specialty parts supplier. Manufacturing is already the profit center, capital returns are supportive, and the valuation remains below book. The risks are equally concrete. The commodity segment is still large. ROE is still only around 7%, and the shares carry a margin-long overhang. This is an analytical map, not investment advice. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.